Hey everyone, and welcome back to the channel. Today, we're tackling a complex and potentially impactful topic: the current trade dynamics between the United States and Canada, particularly as they relate to the agricultural sector. We're going to dig into the nuances of this situation, the challenges it presents, and the potential long-term ramifications for farmers, consumers, and the broader economy. This isn't just a story about two countries. It has implications for the global agricultural landscape. To truly grasp the significance of the present situation, it's essential to understand the historical context. For many years, the United States and Canada have enjoyed a robust and mutually beneficial trading relationship, with agriculture playing a pivotal role. Historically, U.S. agricultural producers have considered Canada a key export market for a variety of products. These often include grains, livestock, and dairy commodities. Simultaneously, Canadian agricultural producers have relied on the U.S. market as a critical outlet for their own goods. This interdependence was formalized through trade agreements like the North American Free Trade Agreement, NAFTA, which was later superseded by the United States-Mexico-Canada Agreement, USMCA. These agreements generally fostered reduced trade barriers, promoting cross-border commerce that benefited both countries. However, the previously stable landscape has begun to shift. In recent times, trade relations between the U.S. and Canada have experienced a noticeable increase in tension, especially in the agricultural sector. A significant event was the imposition of tariffs by the U.S. on a selection of Canadian products, encompassing certain agricultural goods. These tariffs, reaching levels of up to 25% in some instances, immediately introduced a new level of complexity into the trading relationship. The rationale cited by the U.S. government for these tariffs often centers on protecting domestic industries and reducing the overall trade deficit. However, this action has been met with countermeasures. In response to the U.S. tariffs, Canada implemented retaliatory tariffs targeting various U.S. agricultural products. These tariffs directly impacted exports like corn, soybeans, and beef. This reciprocal imposition of tariffs has created a ripple effect throughout the agricultural communities of both nations, leading to uncertainty and financial pressures for producers. Who feels the squeeze? Assessing the impact on specific agricultural sectors. The immediate question is, who bears the brunt of these trade disruptions? Let's examine specific agricultural sectors. Dairy producers. American dairy farmers have traditionally relied on Canadian markets. Tariffs have effectively increased the cost of exporting dairy products to Canada, reducing demand and lowering prices for American dairy products. Grain farmers. Canadian buyers have traditionally been significant purchasers of American grain. Retaliatory tariffs have lowered prices and caused grain farmers to face challenges selling their crops at the expected prices. Livestock farmers. Beef and pork producers face higher costs when exporting livestock to Canada. This decreased demand and resulted in price drop. A key consideration is how these trade actions impact agricultural operations of differing sizes. Larger corporate farms, often with greater financial reserves and diversified operations, may be more equipped to withstand the short-term impacts of trade disputes.
Smaller, family-owned farms, on the other hand, may face more immediate and pronounced challenges. These farms, with potentially smaller profit margins and fewer resources, may struggle to absorb the added costs associated with tariffs. This situation raises concerns about the potential for increased consolidation in the agricultural sector. Larger agricultural entities may seek to acquire struggling smaller operations, further shifting the balance of power within the industry. It's important to remember that trade dynamics aren't solely about numbers and percentages. There's a significant human element. Farmers, facing the combined pressures of volatile weather patterns, market fluctuations, and now trade disputes, experience considerable stress. Family farms, in particular, often represent generations of tradition and are deeply intertwined with the social fabric of rural communities. The economic uncertainty can take a heavy toll on the mental and emotional well-being of farmers and their families. What lies ahead? Potential long-term implications. What are the potential long-term consequences of these trade actions? It's difficult to predict the future with certainty, but some potential scenarios include restructuring of agricultural practices. Both U.S. and Canadian agricultural practices may undergo significant restructuring. Producers might explore alternative crops, modify production methods, or seek new markets. Increased global competition. If U.S. and Canadian agricultural trade remains constrained, other countries might attempt to fill the void. increasing global competition. Consolidation. Small farmers may be forced to consolidate into larger farms or exit the industry entirely. The trade dynamics between the US and Canada also have implications on the global stage. Other countries may see the tensions as an opportunity to increase their agricultural exports. Nations like China, Mexico, or those within the European Union could potentially step in and seek to increase their market share in areas where US and Canadian trade has been reduced. This could present opportunities for farmers in other countries. However, it also brings challenges, as US and Canadian agricultural producers will need to adapt to a more competitive global environment. In response to the challenges posed by trade disputes, some farmers may look to technology and innovation as a way to improve efficiency and reduce costs. Precision agriculture, for example, allows farmers to optimize inputs such as water, fertilizer, and pesticides, leading to increased yields and reduced environmental impact. However, the adoption of new technologies often requires significant upfront investment, which may be a barrier for smaller farms facing financial constraints. Governments in both the US and Canada have a role to play in mitigating the negative impacts of trade disputes on the agricultural sector. Potential policy responses might include financial assistance, providing financial assistance to farmers affected by trade disruptions, trade promotion, supporting efforts to diversify export markets and promote US and Canadian agricultural products abroad, trade negotiations, engaging in constructive trade negotiations to resolve disputes and reduce trade barriers. Navigating the future in this evolving trade landscape will require adaptability, resilience, and strategic decision-making. Potential strategies for farmers might include diversification, diversifying crops and production methods to reduce reliance on specific markets, cost management, implementing cost-saving measures to improve profitability, market research, conducting thorough market research to identify new export opportunities, collaboration, collaborating with other producers and industry stakeholders to advocate for policies that support the agricultural sector. Long-term implications of US and Canadian trade war.
Both the Canadian and US governments have played critical roles in supporting their farmers during these challenging times. In Canada, financial assistance programs and subsidies have served as a buffer, helping farmers manage the economic toll of the tariffs. These measures not only provide immediate relief, but also signal to the agricultural community that the government is invested in their success. In the US, the government has introduced similar support mechanisms to help farmers cope with the negative effects of trade disruptions. Programs such as trade mitigation payments and direct financial aid have been offered to farmers whose markets have been undermined by tariffs. However, while these measures have provided short-term relief, they are not seen as a permanent solution. Many in the farming community are calling for more comprehensive reforms to ensure that farmers are not left exposed to future trade shock. Looking ahead, the consequences of the trade tensions between Canada and the US may extend beyond just the agricultural sector. Global supply chains that depend on the free flow of goods across borders could face significant disruptions as tariffs and trade barriers increase. The agricultural industry, in particular, is highly interconnected, with countries relying on each other for access to essential commodities. As tariffs increase on Canadian goods and vice versa, businesses that depend on these agricultural imports will be forced to reevaluate their supply chain. This could lead to shortages, delayed shipments, and higher costs for businesses, all of which would be passed down to consumers. For example, Canadian exports of dairy products to the US could be hampered by higher tariffs, leading to a shortfall of certain dairy products in the US market. Similarly, American agricultural exports to Canada could face similar challenges, impacting the availability and pricing of key goods on both sides of the border. Moreover, businesses in countries that have close trade ties with Canada and the US, such as Mexico, could find themselves caught in the crossfire of these disputes. As supply chains become more fragmented, businesses worldwide will need to become more agile, adapting to new trade routes, and dealing with the logistical challenges of moving goods in a world where trade relationships are increasingly volatile. In response to the shifting landscape of global trade, many countries are looking to multilateral trade agreements as a way to secure their economic interests. These agreements, whether through regional partnerships like the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, or bilateral trade deals, allow nations to safeguard their access to vital markets while reducing reliance on any single trade partner. The evolving trade dynamics between the U.S. and Canada underscores the complex and ever-changing nature of global trade. Remaining informed, adaptable, and proactive will be crucial for farmers, policymakers, and consumers alike. That's all for today's video.